Hey, what up, Tasty fam? This is Dan Cecilia from the tastycrypto team, and with us today we have a very special guest, Ming, co-founder of RabbitX Perpetual Futures Exchange. Uh, Thanks for being with us today, Ming. Appreciate you coming on, and if you want to give a quick background and intro, that'd be great.
Yeah, sure. Thanks for having me. And I've been a big fan of Tasty Trade for a long time. And quick background about me: I started in crypto in 2017, and I started building RabbitX roughly 2 years ago. And it's been an incredible journey. And we've learned a lot. We've met a lot of great people. And my initial career before I joined crypto, I was in traditional finance. I was a programmatic trader and was also doing options market making in a high frequency trading firm. And yeah, I've been a trader, builder, engineer, wearing many different hats. And I'm just happy to share more about my experience and also try to give back to the community as well.
That's great to hear. Yeah, and it's awesome that you were a tasty trader and learned options and picked up options from the team here. So you mentioned you were background in TradFi, programmatic trader, ran an options desk. I'm wondering, how were you able to take that what you learned there and apply it to the crypto markets? Once you jumped in full time.
Oh, I mean, there's just a lot of there are a lot of similarities and there are a lot of differences. So similarities, you have uh, a lot of high frequency trading strategies that are used in traditional finance are also used in crypto. There are a lot of different nuances with that. You're trading a different asset class, and one of the biggest differences with crypto is that it's a 24/7 market. It never sleeps, right? And it's a high adrenaline and 24 hours, 7 days a week. And, it's very hard to find a sleep schedule that works, especially when, Trump can announce a meme coin on a Sunday night. And, the markets will go crazy. So there are a lot of lessons that I learned from traditional finance that not so much trading, but more on the side of risk management and discipline, right? Because when I first I started investing and trading when I was 16, 17. I bought my first stock when I was 16, and there was a book that I read very early on. It was called Reminiscences of a Stock Operator. And that book really changed my perspective about trading and risk management and the importance of risk management, because you can be the best trader in the world, you can have the best entries, but if you don't have risk management, you're going to blow up your account, right? And then I discovered Tasty Trade, also, in I think first year or second year of uni, and that was when I first heard about this, concept of options, iron condors, uh, straddles, strangles, and I listened to Tom and Tony, talk about what is implied volatility, and that was really what got me interested in options, and ultimately, I had a career in options trading as well, and risk management. As you know, in options, it's not just about upside; it's about risk management. It's about what's your risk return um, look like, right? And so it's the same thing in crypto. You have a lot of opportunities, but you also have to look at your downside. You also have to look at, okay, what's my risk return matrix here? And there are a lot of really good setups if you're patient to have really good risk return profiles. And I think recently, in the past week, there's been some very good opportunities in the market where markets have sold off in crypto. A lot of tokens have sold off 90, 95%, and it's actually a very good risk reward profile to be putting on some small positions here, right? Because where's the marginal seller? The marginal sellers, most of them have already sold, and so the downside is relatively capped compared to 2 3 months ago, right? Where there was still a lot of uncertainty, with the tariffs, and I think compared to now, a lot of that uncertainty has already been priced in. So long story short, I think the biggest lesson that I took into crypto from TradFi is really around risk management. And other than that, like crypto is such a different asset. So it's so dynamic, it's so innovative, and you can't take the same mentality of traditional finance into crypto. I think one of the biggest uh, hurdles that I see a lot of traditional finance, people that try to transition from traditional finance into crypto. One of the biggest hurdles for them is, they were taught that all markets are efficient, especially in, stock markets, FX markets, bond markets. Is highly efficient. It's very hard to find 1 or even 2 basis points of edge. Right. If you can find 2 basis points of edge in the stock market consistently, like, you'll have $100 million assets to manage. Right. But in crypto, like 2 basis points is slippage.
Right.
You're looking at 20, 30, sometimes even 100 basis points of edge. And so I think that's the thing that a lot of people don't understand when they make that transition is you got to expand your horizon. Markets in crypto are not that efficient, and that's where there's also a lot of opportunities.
Yeah, for sure. And I think you touched on a great point that, some of the principles from TradFi definitely apply. Like the main fundamentals of TradFi being risk management definitely apply and apply more in crypto markets because they're a lot more dynamic, a lot more volatile. So you touched on inefficiencies in the crypto market. And I wonder, briefly, what's your approach to, identifying those efficiencies and executing a trade in the crypto market?
Yeah. So typically, we look at events where it drives a lot of volume, right? Because for a trader, you want to go where the volume is, right? Because that's where the most opportunities are. So, for example, like the Trump token, when Trump announced the token launch, prices across different exchanges, they were trading at 10, sometimes even 15% difference, right? And so, if you were ready to capture that opportunity, you can make consistent, price arbitrage, right? So there's CEXs, centralized exchanges, and DEXs, which are decentralized exchanges, and sometimes the prices might get out of line. And so when you have those opportunities, you have to be ready to capture them, and you have to be ready to essentially put on trades. And a lot of it is also it comes down to preparation. You for high frequency trading, you do need to have infrastructure investment. You need to have developers. Not everyone has that, but I think that even for simple strategies like when Trump launched, there were 10% price differences between different exchanges, and that's something that you don't even need to have developers or algorithms. You can just manually click trade, and that's what some people did as well, and you can make pretty good returns from that.
Yeah, for sure. And I think to your point, the markets are inefficient and there's a ton of venues to trade on. So we're looking at the Trump token here on the RabbitX platform. But you mentioned that there's a ton of arbitrage opportunities. Is that what led you to jump in full time? Like, did you just, TradFi, like you said, it's like it takes a while to squeeze out 2 basis points, but you're looking at crypto and you're saying, wow, there's all this arbitrage here, there's all this opportunity. Is that what led you to jump in full time?
Yeah. So when I tell people my story of how I joined crypto, it really is, looking at the inefficiencies in the market that kind of caught my attention initially. But I came for the trade, for the markets, but I really stayed for the tech, because after reading the Bitcoin white paper, I realized that it wasn't just another market. It wasn't just another asset class. It was a whole new paradigm of money and financial infrastructure. And after I read the Ethereum white paper, I realized that, wait, I think these guys are onto something, because it's not just combining, it's not just money and programs in isolation. It's the combination of the two, right? Because we've seen how the internet has changed everyone's lives and increased productivity in every single sector of our economy except for finance, right? And the internet hasn't really, uh, you know, improved the processes of a lot of financial institutions. People are still using Excel spreadsheets in these banks, and a lot of hedge funds. And I was just speaking with a friend of mine who is an analyst at one of the largest private equity firms. And he's telling me, they're still reading PDFs and manually inputting the numbers into Excel spreadsheets. And these Excel spreadsheets are being stored in folders where it's just being passed around email, right? And money is still being, when Elon Musk went into the treasury and they realized that, wait, a lot of these checks don't even have a description written on them and they don't know where it's going. I wasn't surprised, because that's just how our financial system works. Like, things are just lost and we don't know why they're lost. And there's just a lot of inefficiency. There's a lot of opaqueness. And I think blockchain can change that. I think blockchain has both transparency, robustness, and also speed, right? Because transactions, they don't take 2 days, for a wire transfer to arrive. Now they arrive in seconds. And so that was really what got me to stay beyond just taking the initial trade.
Awesome. Yeah, that's I think why a lot of us jumped in, and I definitely echo that story as well, because once you get that experience of seeing internet financial markets improve the lives of people and also improve the efficiencies of trading, business, transacting, like just at a fundamental level, economic transactions, I think you're hooked, right? Like, there's no argument to be made that you go back to a legacy system. And you mentioned the whole like Doge kind of government efficiency thing. Like, it makes sense, right? It makes sense why these systems would be implemented. And anybody who's a crypto native will tell you it's a lot easier to get things done paying people in stable coins, finding the best talent and being able to instantly transact with them to do something or build something, as well as just trading, as well as just financial transactions. So I think we're all in it for the tech, but we're all in it for the improvement as well, the lifestyle improvement. So I want to transition here, because it sounds like there was a light bulb moment for you when you were like, hey, these new systems exist, there's this new internet money, I should launch an exchange. So tell us the story of RabbitX. Like, how did it start? What drew you to the Perpetual future and got you into this space?
For sure. So I've always been a trader at heart. I've always loved markets. I've always loved trading. And to me, trading is like the ultimate game, right? And it's the ultimate system, because it combines everything from technology, psychology, money, programming, and all of those, and risk management, and all of those are overlap to what I'm interested in, right? And I studied actuarial science and economics, and I was meant to be a insurance pricer, right? But then trading and markets, just was too interesting to me, and so I abandoned that path, and ultimately decided to learn about trading, and initially was doing FX trading, and then ultimately got into options. And so I've always been just fascinated with the complexity of the markets and also the beauty and simplicity of it. And when I looked around, this was in early, I think, late 2021, early 2022, and I had seen a lot of DeFi or decentralized finance applications being built on blockchains that enables internet financial infrastructure, right? Built on Ethereum. And uh, I looked around and there were a lot of spot exchanges, but there weren't that many futures exchanges that was leveraging DeFi technology. And, given the passion that I had for markets and the experience that I had, I felt that, I had a unique opportunity and unique perspective to be able to build a futures exchange that was very robust and was accessible to all traders, regardless of where they were in the world, because that's what DeFi and blockchain is meant to bring to people. Is there shouldn't be walls to prevent people from accessing these financial infrastructure and financial services. It should be open to everyone, and it should be transparent, right? The assets should be transparently on the blockchain where everyone can see that it's not missing, it's not being, invested in other projects and, or being siphoned away. And we wanted to offer a better alternative than centralized trading venues, right? And we've seen a lot of centralized exchanges. They have a lot of problems with transparency, with robustness. The famous FTX collapse. I think everyone is familiar with FTX and what happened there. So we didn't want that to continue happening. We thought there must be a better alternative, and so that's when we decided to build RabbitX. And in the spirit of making it accessible for everyone, we also wanted to make it free to trade. So we started offering zero fee trading to everyone for forever. And so that's something that we're really passionate about, is removing the barriers to for people to access financial services, to trade on a better exchange.
Yeah, for sure. And I think it definitely makes sense because if you've been around the space for a while, you notice that, like, I mean, even going back to the Mt. Gox days, right? Like the system's changed, right? And so centralized platforms, there's a lot of trust building, right? Like inherently in building a centralized exchange, like you need to create trust for users, and a lot of time that trust is betrayed. You spoke about FTX, right? We can talk about Bitfinex, we can talk about Mt. Gox, we can talk about any of the exchanges that you've seen blow up, get targeted in hacks, really just abscond with customer funds, right? And this is the Wild West, right? There's not a lot of regulation. We're getting there, but to your point, having an on-chain, transparent futures exchange is a need in the market. And so, I want to really hone in on the Perpetual and that instrument, and why you feel like that is something you wanted to focus on as far as like futures and, just a perpetual future, because it's a different product, right? It's TradFi doesn't really get it, I think. It's something that really was an innovative asset specifically for crypto, and works in crypto. So I just wonder if you can just give us like why the perpetual future, what it is, and why is it so popular?
Yeah, well, I mean, that's a great point, and you touched on a topic that I'm really passionate about. What's interesting is that perpetual futures aren't something new. They originally were the idea was originated in 1992 by Robert Shiller, and in a paper he theorized about the concept of a future that didn't have an expiry date, because as we all know, futures that are familiar to most people, they have an expiry date. For example, for CME, they have Bitcoin monthly and quarterly futures, right? So that means on a set date, the futures contract will expire and settle at some index price. And that means that as a trader, coming up to that expiry, either you have to roll your position, Or if you don't roll your position, you're going to have to take delivery or cash settle, meaning that your position is going to be automatically closed out, which is a very annoying thing. If you're trading Bitcoin and you just want to have exposure to Bitcoin and you don't want to be reminded, it's kind of like, oh, I have to pay my credit card bill again every month. You don't want to think about it. You just want to be long Bitcoin. You just want to have some exposure to Bitcoin. And I just want to long some futures without having to roll every month. And that's the problem that Perpetual Futures solves, is that it is in every aspect similar to a typical futures contract from CME or CBOE. The biggest benefit is that it doesn't have an expiration date, and that means that you don't have to continuously roll your position, right? And it offers a lot better capital efficiency as well, because with perpetual futures in crypto, because the market trades 24/7, and with a real-time liquidation engine, we are able to offer much higher leverage and capital efficiency than traditional futures exchanges like the CME. So, for example, with CME Bitcoin futures, you're only able to get 2 or 3 times leverage, right? So the margin requirement for that is somewhere between 30 to 50%. Now, with perpetual futures, we can offer up to 50 times leverage. And the reason why we're able to offer such a high leverage without having any risk is because of the way that we've designed our risk engine and our risk and liquidation and margining system. Because in the case of traditional futures exchanges, they calculate margin at the end of the trading day, or every 24 hours, or T+2, right? So that means that they need to have enough buffer for a move in Bitcoin within a 24-hour span, right? So for exchanges like CME, they use something called a VAR, or value at risk model, right? So they will simulate what is the highest and lowest possible price that Bitcoin could move in a single day, right? And we've seen Bitcoin move 50% in a single day. So for CME, their model tells them, okay, Bitcoin could move down 50% in a single day. That means that we need to have at least 50% buffer in customer deposits in order to ensure that we don't go insolvent, to ensure that CME doesn't go insolvent, right? Now, with RabbitX and with perpetual futures, we calculate margin on a second-by-second basis, meaning that instead of waiting 24 hours to calculate margin for our customers, we calculate margin for each customer on a second-by-second basis. And if you look at the price movement of Bitcoin on a second-by-second basis, it is not 50%. It is something more like 10, 20, maybe $100, right? Which is roughly about 0.1%. So if that 0.1% is your value at risk, then you can comfortably offer up to 100 times leverage, right, without any increase in your risk. And so we're very conservative. So we don't offer up to 100 times leverage. We only offer up to 50 times leverage, which is already 25 times more than the CME. And we have seen our liquidation, risk, and margining model perform very, very well. And we have not had any situations where we've had insolvent issues or issues with the liquidations, because we give ourselves quite a significant buffer and margin for error.
Gotcha. Yeah, and I think one of the things that is interesting about the perpetual future is the fact that the markets trade differently, and I think you touched on it, but it goes off of a funding rate, right? So if you have a position on, whether you're long or short, you're paying or receiving a funding rate, right? Depending on the index and I think it's index and Oracle price. Can you touch on that a little bit, like the funding rate mechanism and how that works?
Yeah, sure. That's a great question, and that's something that I think a lot of people are curious about, how the funding rate mechanism works. And if you read the documentation of the exchanges, it can be very confusing because there's a lot of formulas and math being thrown around. But put simply, um, the difference, going back to the difference between traditional futures contracts and perpetual contracts. With traditional futures contract that have an expiration, on expiration, you know exactly the price of the future is going to settle to the underlying index price, right? Or the underlying spot price. Now, the thing with the perpetual futures is that it never settles. So it never settles to the index price. So then you need to have a mechanism to bring the perpetual price and the index price in line. Because if the Bitcoin price goes up to $1 million, well, we expect the futures price to go up to $1 million as well. But there is no, I mean, if there is no trades happening, the price of the perpetual doesn't need to match the index price exactly. So this is where we have the funding rate. The funding rate is a mechanism to bring the price of the futures in line with the underlying spot price. And how it works is that as the price of the futures deviates away from the underlying index price, that funding rate is capturing the price difference between the perpetual price and the underlying spot price. Meaning, if the spot price is, if the spot price of Bitcoin is 1% higher than the futures price, then the next funding rate is going to be 1% to compensate for people that are long the futures at 1% lower than the index price. Because theoretically, if you're long the futures and the spot price goes up 1%, you would expect the futures price to go up 1% as well, and you should make 1%, right? But if the futures price doesn't move and the spot price has already gone up 1%, well, I should be compensated for that. And so that's where the funding rate comes in. The funding rate, even if the futures price doesn't move, I'm still being compensated for that 1%. And so this is just broad strokes. Obviously, there's some nuances, and each exchange has slightly different ways to calculate the funding rate. But broad strokes, that is the primary objective and primary mechanism that brings the futures price in line with the underlying index price.
Got it. Yeah, I really think that's an important note, because that is something that I think trips up a lot of traders that are new to the perp product, because they might not understand that mechanism, that funding mechanism, right? There's no expiration date, there's no rollover, but realistically, you're paying a funding rate, and that's meant to kind of keep that future and spot price in line. So I want to take a step back for a second, because one of the things with RabbitX is user experience, right? Like, I think you've touched on that user experience is a really important part of your philosophy for building. And I think when you talk with crypto users, or rather people crypto that are aware of crypto, the one thing they touch on is that the user experience sucks usually, right? Like, you have to get this wallet, you have to figure out a way to on ramp. It's confusing. If you lose your seed phrase, you're done. You lose your money, and so I think it trips up a lot of people, and I think it's been a very big hurdle to get mass adoption. So I'm wondering if you could take us through some of your thoughts on like user onboarding, funding, how to get money on the platform, kind of like how you design the platform to be as easy as possible for people to just get on and start trading.
Yeah, you touched on a really important point, because as DeFi builders, as crypto users, we oftentimes forget that it's very hard for the average user to use crypto. And we've seen a lot of instances where people have lost their seed phrases to their wallets, and essentially the assets in the wallets are lost. So we've tried to solve all those problems by leveraging the improvements in technology to blockchain and DeFi apps over the years. So one of the biggest innovations last year that we've implemented is the ability for people to create wallets using their email, right? And so it's easy to forget a seed phrase. It's easy to forget your private key, which is a 36-letter private key with numbers and letters. But it's not easy to forget your email, right? And I think everyone, has a Gmail account or a Twitter account, Facebook account. So we've made it possible for people to actually sign in and sign up with their email. And in the background, we'll create a self-custodial wallet, meaning that we don't have control over the wallet. The wallet is fully under your control. And that is linked to your email, right? So you can use that email and log into other DeFi apps, and it will connect with the same wallet, right? And your assets will always be there. And you can add, for additional security, you can add 2FA, you can add links to your phone number as well. So for example, if you forget your email, you can sign in with your phone number. And so we've added these additional protections and improvements to the user wallet management, right? And we're going to be pushing out some more additional UI features that are going to make it easier for users to see their assets in their wallet, and also transfer their assets to different wallets as well. The second thing is, for a lot of new users, they don't understand and they shouldn't need to have gas to sign transactions on DeFi, because this is a very, I guess, unintuitive concept that, okay, in order to use these apps, I need to first buy Ethereum, and then I need to send that Ethereum to my wallet before I can even do a single transaction, right? And that's been one of the biggest hurdles for a lot of users to onboard into DeFi. And so we have recently implemented a new technology that enables users to sign transactions and deposit without paying any gas and without having any ETH in their wallet. So a lot of new users, they created a new wallet. That wallet is empty. There's no ETH in it, but they're still able to deposit using Visa, MasterCard, or ACH or SEPA transfers, and they don't need to have gas in their wallet, right? And when they withdraw, they can also pay for that gas with stablecoins. So they can pay for gas with stablecoins so that they don't need to buy ETH to then send another transaction.
Got it. Yeah. So you've really made it simple and intuitive and very familiar to just basically to what a centralized or TradFi platform would feel like. So you have abstracted away gas, right? There shouldn't be any transaction fees just to even like move money on and off. And you've also provided various funding mechanisms, right? Like it's easy to connect to Apple Pay. It's easy to connect Google Pay. If I got a credit card, debit card, obviously bank in certain jurisdictions, Venmo, PayPal, ACH, like you've made it very similar to traditional exchanges. And then even just spinning up a wallet, right? Easy, plug your email in, plug your social account in, and you're good to go. So, I think that's a really interesting differentiated feature. And I'm wondering, are there any other key features of RabbitX that you feel puts it head and shoulders above other perp dexes in the space?
Yeah, so I don't know if this is available in the US, but for most countries outside of the US, people will actually be able to download our mobile app. So we are one of the first, if not the only, perp dex that has a mobile app in the Apple App Store and Google Play Store. And so traders can actually download the app, sign up with their email, fund it with a credit card or ACH, and start trading on their mobile without any difficulty. Because I think a lot of, if we want to reach more traders, it needs to be in a form factor that is convenient to everyone, right? And just having it on a laptop, no, I think most people don't carry around their laptop everywhere, but they're always carrying their phone around. So in order to make it easier for our users, it needs to be in a convenient form factor.
Right. Yeah. Yeah. And that makes sense. I think you are able to get it at least downloaded in the U.S. I have it on my phone. So I think it is available in the U.S. As far as like the funding mechanisms go, I'm not sure if you can do banking, but there's obviously other ways to get money on there and kind of trade on the go. So I think that's a really important feature. The other thing I think you touched on it earlier was the fee structure, right? You've made it so that the front end, and correct me if I'm wrong, you've made it so that the front end doesn't have fees, right? So can you walk
Yeah,
us through that
correct.
model a little bit?
Yeah, so we found that fees are the silent killer for a lot of traders' portfolios, right? And it's something that you pay at the whenever you trade on a centralized exchange or any type of exchange, you're paying some fees or hidden fees to the exchange, and it adds up. Over the course of a year, you might pay thousands of dollars in fees, and so um, what we have, our philosophy has always been to lower the barrier for traders, for investors. And so what we have decided to do is actually remove and waive all fees for the everyday trader forever. And so if you're trading from our mobile app or if you're trading from our front end, the exchange, we don't charge any fees. So our business model then is, instead of charging the everyday traders a trading fee, instead we're charging institutional and high frequency traders and API traders a fee to use our robust and high frequency APIs, right? So these are typically market makers, these are HFTs, and when we host these APIs, we have to pay cloud, we have to pay infrastructure. So a lot of that cost we pass on to these HFTs and to these market makers rather than passing them on to the average retail trader. So really, like what Robinhood set out to do, which is take from the rich and give to the poor, we've done that, right? We're charging a fee to the institutions in order to subsidize the trading fees and waiving the trading fees for retail traders, right? And so, a lot of these institutions, they're already paying fees on other exchanges, on other venues. So to them, there's no difference.
Right. Right. Yeah. And I think that's a really interesting spin on the model because most of the time, Robinhood, some of these like legacy platforms, they are retail friendly. They do provide a very robust feature set, but usually you don't know you're getting killed on fees, especially when it comes to crypto. Like the TradFi no commission stock trading thing, that's been around for years, but I think in crypto specifically, these platforms really do kill the average user on fees, and they make their fee structure very complex. So I think that's an interesting
Yeah.
spin on the model, and I hope it works out. I hope users are happy with it, and we've kind of walked through this whole philosophy around RabbitX and how you've built it, and I'm just wondering what has been your biggest challenge in regards to building and launching it, as a founder.
Yeah, honestly, the biggest challenge is finding great people. Building a great team, and I think we have one of the best teams, best builders in our team, and I'm very proud of the team that we've assembled. And we're constantly looking for great builders and great people to join our team because a organization is the sum of the people in it, right? And so with the right people and giving them the right tools allows our product to improve exponentially, allows our marketing to improve exponentially. And so that's been really the biggest challenge. I say, my job is finding the right people, putting them in the right seats, and then getting out of the way.
Yeah. That makes sense, and I think if you could just do that, right, you increase your chances of success as a startup by tenfold. Just find the right people, let them do what they need to do, make sure you guys are all moving in the same direction, and I think you'll increase your chance of success for sure. And then as a founder, who's helped you the most? Like, do you have any advisors? Is it team members, family members that's kind of helped you through the challenges of building an exchange?
Yeah, there's been a lot of people that I really appreciate uh, throughout the journey. There's been very helpful advice from my investors, from the community, and other founders as well. Obviously, like our users and community is one of my biggest source of inspiration and ideas for what features to build next. And my family has always been very supportive, and friends as well. I think friends are the family that you can choose, and I think having a great network of friends and family to support that journey is also really important, because at the end of the day, we're all human. We're just trying to make an impact, a positive impact in the world. And if RabbitX can make a positive impact to people's lives, to help make financial markets more efficient and make financial markets more accessible to everyone, I think that would be a very good outcome.
Yeah, for sure. And I think you touched on it too. Is like community is everything. Your users' feedback is everything. Obviously, having the right advisors, investors, and friends in your corner helps as well. So, give us some insights into the roadmap. Like, drop some alpha. Like, is there anything new coming? Are you releasing anything that you feel is like a game changer, or any incentives for users?
Yeah, so we ultimately believe that perpetual futures are the better form factor for derivatives trading, and the future of derivatives trading. And so we want to bring perpetual futures to not just crypto, but also to other asset classes, so real world assets like commodities like gold, FX, stock indices. So we've recently launched Pax Gold futures, which is a a tokenized gold back token, and we've launched futures on top of them. So people can now actually trade gold futures with 50x leverage on RabbitX with zero fees. And so that's one of many that are going to be released in the coming quarter. So we're aiming to have also stock indices. We're aiming to have more commodities and maybe even FX pairs as well. So that's something really exciting. And then we also have a RBX token that we are revamping and also changing up and refreshing the tokenomics for our RBX token. And there's a lot of strategies that we can also make it into automated trading via a AI bot, right, and an AI Telegram bot. So that's also something it's an internal project that we've been working on as a concept, and I'm very excited to see how we can merge various AI tools together with RabbitX and combine finance and AI together.
Awesome. Yeah, I'm taking a look at the PaxG chart now. I think gold has been on a tear, obviously with the whole tariffs, inflation. Definitely a product people want. Obviously, as you mentioned, AI, huge bubble, I guess, or a lot of attention on it. So being able to add that as a feature, definitely a differentiator. And then everyone loves a token, right? Everyone wants a token. Everyone wants to be somehow have a claim or some type of tie to the platform or project or protocol. So definitely looking forward to seeing those features implemented. We got a couple minutes left. I just want to hear your thoughts broadly about just a bold prediction, or what are you looking forward? What do you have for, like, what is your prediction for Bitcoin or crypto broadly over the next year?
Yeah, I think my prediction for Bitcoin is it's clear that just based on the uh, market sentiment, and also if you just look at the price action, the stock market has just taken a huge beating. I think S&P at the lowest point it was down or close to 20%, and Bitcoin was holding pretty strong throughout that market's correction in the stocks, and I think that it's really solidified its position as digital gold, right? And it's a lot more, it's a lot easier to carry around a ledger or a USB with your bitcoins than it is to carry around lugging physical gold, right?
Right.
So I think it's a more convenient, more efficient way to store value, especially in a global trade war and when there's political uncertainty. I think that the world has changed after Trump announced the tariffs, and the level of political and global uncertainty has reached a new level. And so, if traders and investors are looking for a way to hedge that and a way to simultaneously participate in the merger of finance and technology, well, I think Bitcoin is probably the best, trade to represent that thesis, right? So, I think there's a lot of positive catalysts for Bitcoin. Now, whether then you can argue, okay, is the price a fair price? Is it a good price to enter now? I don't know. The truth is, we don't know whether the prices are going to continue going up past its previous all-time high. But for me, I think that it has solidified itself as a safe haven currency. And my macro thesis, I'm not a macro expert, but just kind of thinking it through from first principles, if we game theory this out with the trade war, under almost every scenario, it is in both the US and China's interest to devalue their currency under every scenario. So whether that trade war escalates or whether the trade war de-escalates, meaning they sign a deal and whatnot, it is in both countries' interest to devalue their currency. And under that type of assumption that both countries devalue their currency, well, it is not really safe to keep your money in US dollars, and it's not safe to keep your money in emerging markets either. So then the only safe haven you have is either gold or Bitcoin. And I think that if you look at the market cap of gold and Bitcoin, I think Bitcoin probably represents a better risk reward than gold. So, I'm holding both, but I am obviously biased, and I hold a lot more Bitcoin than gold.
Yeah, for sure. I hear you, because I hold a lot of Bitcoin as well, or more Bitcoin than gold rather. So yeah, definitely hear you. Interesting perspective. I think will be interesting to see how it plays out. So before we let you go, I just got one more question. What advice do you have for new crypto traders or investors?
I would say try to be open-minded. I would say that do your own research, question everything, but be open-minded.
Love that. All right. Thanks, Ming. Thanks everyone for joining. Ming Wu of RabbitX, former Tasty trader, star founder, Bitcoiner. So thanks, Ming. Appreciate it.
Awesome. Thanks for having me. Take care.
Take care.